Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, unfortunately, is not Michael Becker, but James Eng. James is with Old Capital, and he's a Senior Director. Hello, James.
Hey, Paul.
So in the podcast today, we have the Woodruffs and the Sharmas, and they have completed 3 transactions on buying apartments. And we're going to talk a little bit about what they've done. We're going to meet them a little bit, and then we want to find a little bit about what happens when things go wrong in lending. So our podcast is typically very positive because we have positive experience with our clients, but every once in a while we have a transaction that right in the middle of it goes wrong, and so we have to kind of fix it and kind of put Humpty Dumpty back together again. We're going to talk a little bit about that. And James was a big part of putting the transaction back together for Old Capital. So James being on the team here. But first, we want to introduce the Sharmas and the Woodruffs. And so I want to introduce Bhuvan, and I want Bhuvan to introduce his wife. I want Tom to introduce his wife. And my question is, how long have you guys been married?
Wow. It's been 30 years.
30 years as having a business partner. Now, introduce your business partner besides your spouse.
Okay. Tom Woodruff is our business partner.
Yes.
And Brenda.
And Brenda?
Yeah. And obviously Pratima Sharma is my wife, and we've been there for 30 years. It's going to be 31 as of this year.
Fantastic.
So,
That's great. And then, Tom, how long have you guys been married?
Well, we've been married, the next anniversary will be 43 years.
43 years.
And we've been working together for just about 43 years. Actually, we've been in the construction business in one way or the other for nearly all of that period of time.
Wow. So you're very active in the construction business. Let's go back to the Sharmas a little bit. So husband and wife that have been married for, say, 31 years. Tell us a little bit about what you do with your day jobs.
Well, first of all, Paul, thank you for having us. It's a pleasure to be here with you. A little bit of my background is I actually graduated from Master of Information System from Marist College. It's a small college up in Poughkeepsie, New York.
Okay.
And then I also completed my EMBA from SMU. As I was completing a master's degree, I wanted to find something, what I wanted to do with my life. So I started the IT industry, and I've been in the IT industry for almost 30 years. And at the same time, when we're doing IT industry, I say, what else do we want to do? We decided to take a plunge from the cold weather from Poughkeepsie in New York. I said, well, we had it enough. We drove down to Dallas, Texas. I found a consulting assignment here, worked for the defense company, and then started working for the defense company. And then we moved down to Dallas, Texas about 21 years ago. Is it correct?
Yeah, 21, 22.
Right.
Okay,
So, and also in the middle of the thing, I also did some consulting from compliance and audit perspective. So basically, that's my forte right now. I'm a auditor. I'm a compliance person. I've done almost everything from back end to control design.
And a very analytical person.
Person. That is correct. I love spreadsheet.
Yes, you do. Yes, you do. All right. And what do you do?
And so I graduated with a degree of computer science from Rochester Institute of Technology.
Okay.
And I joined right out of college IBM in their system development lab, and did that for a few years. Then when Bhuvan decided to leave the cold weather and surface up at the nice and warm Dallas weather, I joined him here and transitioned into the telecom industry.
Okay.
I've been working with some of the large telecom firms. I have a couple of patents in the voice over IP technology that I own, and right now I've been working in the systems engineering as well as in project management, managing multi-million-dollar projects where I have launched 4 products in femtocell technology and about to launch a 5th one.
Holy cow. So, things that I've never even heard about, but I can tell you it sounds like it's IT business. Okay, let's go to the other side of the table. Tom and Brendan, tell us a little bit about what your background is and what you do.
Well, my background, I'm a degreed engineer from Texas A&M, worked in industry for a few years, and then went back to a family business in West Texas. And we have worked in various things, different parts of the construction business and supply for all that period of time. In 1993, Brenda and I formed a home building business and started building single family residences. And from that, we went into residential development. And so we still have some developed land out in West Texas and home building business out there.
Okay, so on one side of the table, I have IT. The other side of the table, I have an engineer by training, but also to construction background piece. So how the heck did you guys get together, for one, and where did the passion for multifamily come from? So, Sharma's?
Right. So, just like I say, after working 50 years in a corporate America, we wanted to see what's our horizon is. Our boys are in college, so it's something we want to do different than just a corporate America. So, we did some reading on the real estate. As we finished reading it, we also, at the same time, we also joined a investment club.
Okay.
And as part of the investment club, we started to meet a lot of our investor group. We talked to some of the attorneys. We also we came and talked to Paul people. His knowledge was really given to very positive, what we want to do. So at that point, he's saying, let's move on to do something else.
Right. So after we joined the local investment club, we started to, learn the strategy taught there. The training on real estate given over there really changed our thinking. Before joining the club, we were about to acquire 20 plus condos. And we heard from the radio shows and some friends to join that club. After we joined, we really learned how multifamily investing can be made or can be realized. So that's how it all began. And once we joined the club, obviously, Tom and Brenda had joined around the same time. So that's how we met together. Our strategy was to build a very strong team. The business model was to build the team so that we can continue to focus on our day jobs and have this team grow to work on the investment side.
Okay, and then Tom, how come you joined this investment club?
Well, about 3 years ago, we took a drive and we drove up to Dallas, and when we didn't see mesquite trees anymore, we decided that's where we wanted to live. So we built a home in Granbury, which is probably about 70 miles from here to the southwest. But to make a long story short, we have investments in some commercial and in several single-family real estate ventures and developed land, etc. And my interest was to expand that into multifamily. And so we joined an investor club here locally in Dallas as we're becoming established. And we took our business plan, our personal business plan, and one of the items was to get to know other people that were interested in and get to know the major players in the area and start investing in some apartments. And I do the planning, Brenda does the talking, and she's the one that actually I think met Bhuvan, and we got together and started visiting about that. But that's how we got into the multifamily part of it and the reasoning behind that.
But you had never done it prior to that.
We had never done it prior, and we needed to gather up some information and get with the right people and understand the business, and didn't really have the time to become a lead investor. So we were more interested in finding somebody that wanted to take on that role. And investing with Bhuvan and Pratima, we found that they wanted to dedicate the time and effort and take on that role. And so as we visited, they started seeking out projects and becoming educated in that, and started out with no knowledge of the multifamily, just like we did, and then have become very well versed in it.
So you came out of the IT business, came out of the home building business, and you're both still in that business. I mean, you haven't changed
We have not here.
So you guys own 3 apartment buildings, and let's kind of talk about transaction number 1 that you guys did. How long ago was it that you bought it?
So Paul, just like I say, we didn't have any real estate or single family, multifamily business. We just wanted to go in multifamily just because, we thought that our time is more valuable. Just not running is 50 houses one by one. We wanted to have all 50 houses under the one roof. So during the time when we would actually joining the investment club, we started to look for opportunities what we want to do. So we started talking to the different lender. We were starting talking to the different broker, and we just came across this property, and we jumped on it. We saw a couple of the properties, but this was a good property. We made an LOI, and
What's that?
letter of intent.
Letter of intent.
Oh,
Okay.
Letter of intent.
Okay.
So basically what we're saying that we made an offer to buy this property, and made an offer. We thought we were on the second one in the lead, and we found out that we lost the deal, this one. And it sat there. We started looking at some other property, and after 3 months later, we got a call from our broker and say, "Would you like to still want to buy the property?" We wasted no time. We just put an LOI again, and guess what happened? We bought the cheaper than what we made an offer previously.
Wow. Yeah.
So we saved almost about $40,000. I don't know exact number. So we bought the property without any problem, and we have this property. So this is the property that you have. So I'll let you talk about the property.
Yeah, that was within a year after we had decided to join the club.
What did you guys like about that property, that first property?
Well, it was very manageable.
Okay.
It was a hybrid deal. Because it was a first deal, we did not want to do a value add. We were still in the learning mode.
Okay.
So the components that it gave us were something that we could handle.
When you say hybrid, what do you mean hybrid?
Hybrid meaning that it was not a fully functional property, but it did not require a lot of upgrades either.
Okay. All right.
And this property is Sunrise Suites up in Irving. It's a 55 unit property, and there's a 52 revenue generated, units. So it does have a pitch roof. It's a 2 single story building built in 1962, I believe. That's right.
So how's that property? So you've owned it for about 2 years now, or how long have you owned that property?
Yes, we have.
Just
we are
about to-
about to complete 2 years on it. It's been
Almost 20 months and 22 months.
22 months.
So tell me a little bit about where you bought it and where you've taken it now.
Sure, go ahead.
So when we purchased it, the property was running with 88% occupancy level, and we had projected 9 to 10% NOI. Right now, the property is running with 100% occupancy, and we have more than doubled the projected revenue that we had communicated to our investor group.
Great.
Give me exactly what that means. I mean, so what did you do in terms of the rental portion of the income? So the people were living in your property. Remember what you started off at for rents, and where are rents now?
So when we took over the property, the interiors of the properties, we had the stick down tiles. We had the fiberglass in the tubs. So we made extensive upgrades to the interiors of the units.
Okay.
We changed it to the planks, two-tone paints. We made kitchen upgrades, countertops, bathroom fixtures, and all that. A lot of interior upgrades. And then also we did the exterior upgrades to the property that helped us charge the higher rents.
Right. And your rent started off at what, and where are they right now? Do you remember?
Yes. So rents started. Some were paying $500 and for 1-bedroom units. I'll give you an example. And some were paying $450 even. After the upgrade, we started charging $599. And as of last week, a few apartments are now at $678.
Holy cow. Now that is a success. These transactions, as everybody knows, what I preach about, they fail for 2 reasons. One is poor management on the property, and the second thing is not having all the capital, the capex, so the rehab dollars into the loan on the front side. A lot of people think that when they buy a property that what they should do is out of the cash flow, take the money to upgrade the property, and that's wrong. What you want to do is when you acquire the property, you want to make sure you put as much rehab into that loan itself, and then you're able to draw down on the rehab dollars and fix the property up front. Don't fix it out of cash flow, fix it up front. And that's what you guys did. You acquired the property. We provided the acquisition rehab bridge loan for you. You're into it for the second year. And tell me a little bit, you think you're going to keep this property? This is kind of your starter property. It's a little older property. But you're able to raise rents up. You think you're going to keep that? Or are you thinking about possibly selling it in the next year or two?
So, Paul, that's a great question. At this moment, the property is running very well. We are 100%, pretty much every month, 98, 100%. We have discussed with our group of the team. It is the point that we can go refi this or probably start selling. The market is really strong right now. So we possibly thinking that we might put this on sale for just to try on it.
That's good. So in this transaction, when it was built and put together, just the entity itself, it was Tom and Brenda and then Bhuvan and Pratima in that transaction. So I would say that Bhuvan is the captain of the airplane. Tom is the first officer. By the way, he is a pilot, so I can use this analogy. He knows where I'm going with this. So Bhuvan is the captain, Tom is the first officer in the respective families. And then behind the curtain or the door is all of their limited partners. Those are the people that put money into the transaction itself. So they have a voice and a say whether they want to sell the property or not. They are the ones that get a return on their money on an investment. But it's really Tom and Bhuvan and their business partner wives make decisions about what they're going to do with this property. So it's come to a point that they may decide to sell it, or they may just continue to keep the ownership and may refinance it to a non-recourse longer term and just collect a rate of return on their investment, maybe take some cash out too, since you've done so well. So second property, James, why don't you talk a little bit about that?
Sure. Do you want to move on to the second property that you guys purchased?
Yes, the second property we purchased up in Bedford, Texas, and it used to be Hampton. And now we actually rebranded. So we call it Avanti on Central. The property we bought and closed at August of 28th of last year. So this property actually came from some of those close contacts. And we wanted to move ourselves out from the smaller to 100 plus unit property. So this was a perfect fit for us. It's a 137 unit property, and this is a value add deal as compared to the hybrid deal, the previous one.
So this property, as Bhuvan was saying, is in Bedford, Texas, which from Bedford to Irving, where their first property is probably about 12 miles.
Yeah, probably less than that.
Yeah, something like that. Not too terribly far away. It's in the area that is not too far away for whether they want to manage the property themselves or have a third-party property management company. So you guys, you almost doubled the size of your portfolio from one property to now the second property, and the second property was twice as large as the first property. So tell us a little bit about, you rebranded the property, and then you got a loan on the property, and you did it as a non-recourse bridge loan. So talk to us a little bit about that one.
Right. So the property, the seller had recently acquired the property by themselves, and they were in the middle of making the exterior upgrades when they decided to sell it. So we took over and continued the exterior upgrades, and then took, our experience from Sunrise of, extensively upgrading the interior so that we can upgrade the rents as well. So both of those components we have built into this new property. And moving right along, and it has been 4 months now, almost going to be 5 now. And the property is running from 88% occupancy level now to 95% leased as of this morning.
Great.
The 95% we also, because of the value add properties, there's a rehab component built in. Now, when we got the property, we asked for $600,000 rehab. So basically means that we have estimated that every month, as part of the remodeling, we will upgrade 5 or 6 unit rehab. So as of now, we have already done upgrading 25 units from ground up. We're doing, upgrade, changing the floor, replacing the refrigerator. We're putting in new refrigerators. We're also appliances. We're also putting a microwave, and new bathtub, tile bathtubs in there. We're putting in new light fixtures in there. What we try to do in this property, and the same thing with Sunrise, is we want to provide C-class property resident a B-class amenities, living status. We think that these guys work hard, they can use that thing. So in that case, we are keeping our strategy that way, that let's work on that situation rather than trying to go the very minimal upgrades we do. So we do the right updates, right time, and right set of people. In this Avanti, we are also not only doing upgrade, we are also upping our tenant base. So we want to bring this property, the idea is to bring it a B plus or B minus.
Tom, what do you think about that property?
Well, I took a look at it and I thought it was a pretty nice property. I would like to touch on something that y'all mentioned a while ago, is they're managing this property and they've got a remodel schedule with a velocity of about 5 units per month. And they've been able to maintain the property somewhere in the high 80s, low 90s% occupied. And you sit down and think about that. How do you get that many people to move or shuffle to the side to get those units done? It's a real management act, and they've done a real good job at it. Additionally, to help ensure that people understand what they're doing, because it's so highly occupied while all this is happening, is they've built a model unit so that everybody that's looking to rent in the future can come in and see exactly what the upgrade will look like. And so that helps them visualize what they'll be moving into. And so we're taking these units that are a little worn and probably needed a little loving care, and fix them up to a certain standard and showing the people, and people are willing to rent those, and so we've had real good success with that.
It's amazing what you can hear a little bit about on this partnership is that on one side of the table we have the IT people that like spreadsheets, they're very analytical, and they have big ideas of what they want to do. But we also have the realist that is on the other side of the table, and you can hear what he's talking about, is that it's like building a house, so to speak, with having your owners inside the house. It's very difficult to rehab these properties with the high occupancy of the property and trying to get these transactions returned from being not upgraded to being upgraded, and kind of putting Humpty Dumpty back together again. And having a person that has a background like what Tom and Brenda have, I think is a great asset for the team. So I would encourage people who are not in partnerships to really look at putting maybe a partnership together using other people's skills that you may not have. If you're an IT person or an engineer, look for somebody that has real experience like what Tom has on building something and using his skills. Anything more we want to talk about on your new acquisition here on Avanti?
Just a quick to add on Avanti is that how just rebranding the apartment property changed. So once we put the sign of January 9th, our traffic has grown exponentially. When I'm talking about, we were getting like 5 or 6 people. We've been getting a weekly report from our apartment management company. We have moved to 25, 37.
So
18,
much traffic
just the
coming
traffic
in per week.
just by changing the name of the property.
So by rebranding the property, you have tremendous increase of just traffic flow on the property. And tell me a little bit about the city. Pretty good relationship with the city?
Yes, very good relationship. They don't have too many restrictions that we have come across versus the
that's
newest
something
property.
you want to do, is you could have a good relationship with your city inspector, knowing all the rules that the city has before you acquire a property, and that's what you guys did. Another thing is that what you've heard is that they have a third-party property management company that probably manages over 10,000 units or so.
11,000.
11,000 units, and so since Tom and Bhuvan and their spouses, they have full-time jobs. It's better to put it in the hands of a professional that does it every day, that's in the market itself and kind of knows what's going on. So another way to share skills is having a third-party property management company. Even though you're going to pay, pay a fee, and that's already included into the expenses of the property, it relieves you of a lot of pressure of making sure the property is run optimally.
Just to add on to the city one, once we took over the property, we got a call from our manager. They say, the inspector was here and they say, I understand you have a new owner. We've been telling the owners to replace the fence. We want to upgrade the driveway. Do you have the plan? So our manager pulled down the plan. He said, look what we are trying to do. We're going to replace the fence. We're going to do the driveway. We have already upgraded the outside. We're going to do this thing. So, it's a relationship. And they were saying, okay, that's good. They were very happy to hear that what we plan to do with the property. And that's exactly they were looking for last many, many years to upgrade this property.
It's great. Anything else on that one? We can move on to your latest acquisition. How did you find this third property?
So we were in the process of acquiring Avanti on Central, and heard that the property right across Avanti came on market. So it just made so much sense to acquire that property to grow, economy of scale, use the same management staff, and give the benefits, pass on the benefits to our investors.
Great. So on this transaction, so you guys were looking to acquire this property at the end of last year. You got it under contract. And then tell me a little bit about some of the bumps in the road on this transaction.
Well, the loan terms started out on a very good note. We were again going to get a non-recourse loan, and this time with the lender that we always wanted to be part of, the Fannie Mae.
Sure.
And there was an 80-20 loan that we were offered, and things were looking great till we had a small hiccup with term or a restriction from the city of Euless that Fannie Mae did not like.
Okay.
So let's clarify that. It was not you. So Fannie Mae did not like, they liked you. They liked both of the sponsorship people in the transaction. What they didn't like was the property of zoning. There was a zoning piece in the deal where this city itself is a little bit restrictive, and it's called a rebuildability zoning issue. So, James, maybe you can talk a little bit about what the heck that means?
So in this particular instance, the city would require you, I think, on this property to, if there was a greater than, let's say, 50% casualty in terms of either a tornado or some sort of storm that damaged the property or fire, then you guys would have to rebuild to a certain extent. And so Fannie could not get comfortable on that piece of it. So they came back to us and said that they would want the transaction at a significantly lower leverage. And so we sought out a different solution. And so we went to a local regional bank that we had a relationship with, and we got the deal sized up very quickly after hearing the news. And you guys talk about sort of your working with that bank and how the process was after we signed the loan application on that one.
Very smooth and very fast. I mean, thanks to you for, putting us together in contact with them. The bank did not have so much red tape that, we had to go through with Fannie Mae. And they were very accommodating. They understood our situation. Everything was put, all the conditions were put open in front of them, and they accepted those, moved things very fast. Within 2 weeks after we had requested them for the loan, given the holiday time,
right.
It was it was right around Christmas,
right.
that they came back first week of January and said that the loan is almost approved. We are working on the final paperwork.
Right. So I think you guys signed the loan application maybe December 14th or 15th, and then we had approval the first week of January. So
that's true.
In 2 weeks that a lot of banks were off or on vacation, that we were able to get the deal done because you guys were on a time crunch and the seller was being difficult in terms of negotiations. So we wanted to get the deal done for you guys in the time frame that you guys had extended to.
Right. Right, and that really was so much beneficial. Not looking for another extension and closing the deal very fast.
Just to give you how many extensions we get, we heard from Paul. Don't worry about it. We'll close the deal. We had 4 extensions on this one, Paul, if I'm not mistaken. And the seller was really getting desperate. We keep pushing the money in there. He's just getting greedy because.
Yeah, we started with $50,000 hard
in the deal. Okay.
And we ended up with $175,000
Okay.
hard by the time we closed.
So if you hadn't closed the transaction, you would have lost $170-some thousand, which would not have made a good day.
That's true.
So I'll toot our own horn a little bit here because, with Old Capital, we were able to see that there was a problem that was going to possibly be a problem down the road, and then it became a problem. And with the help of James and with the team here, the groups that were buying the property, we were able to change directions fairly quickly. James was able to work with the lender and underwriting committee to try to get the transaction put back on the railroad tracks and then close in a fairly rapid time. What I like about this transaction is that Avanti is on one side of the street, which is in Bedford, and then on the other side of the street, it's a new town and it's Euless. But you almost can have one manager that manages both properties.
Yes.
Talk a little bit about efficiency and scale, having 2 separate properties, but with one management company. How many total units are you going to have on that corner?
Total 195 units. Wow. And that's why it will be very manageable with the team that we have. We have 1 full-time manager and 1 full-time assistant manager, 1 full-time maintenance lead, and then 1 part-time. So having up to 200 to 300 units managed with that group is very doable to meet the economy of scale there.
Absolutely. Imagine one company that owns that property. They have a whole management team with a maintenance group and a manager on property. Other would have the same thing. But when you combine both properties together, you can really have economies of scale, is reduce the number of people in the property and the expenses, which means you have a higher NOI and a higher valuation of the property. Tom, what's your 2 cents on that property? Liked it?
I take probably a nuts and bolts look at all the properties that we look at, and the property itself was in really good shape. And I like the economies of scale in the deal, and I think that by having them that close together, then we'll get some real benefit out of that as far as cost savings.
Good deal. James?
So now that you have 3 acquisitions under your belt, what's next for you guys?
Next is to scale the number of units a little bigger, right? So continue to grow. And maybe, moving forward, maybe sell the smaller number of units and then buy bigger property.
At what period of time do you guys think about trading in your IT position to something else?
We are still in that transitioning mode. But, as you touched upon it earlier, we have a vision to lead the properties, but enjoy as an investor. So we do not have a vision to manage the properties 100%, but be an investor.
So find
and that's
the property
why
and raise the money, but not necessarily day-to-day management. Have that.
No.
All right.
Right. I think, the idea is that, the more we grow, and at a certain point, we will be able to, sell, just like Pratima says, sell the smaller property, get into the bigger units, and build our portfolio that we feel pretty comfortable that, okay, one of us can actually lead the job. We do spend, our jobs are very demanding, but having a management company, and Paul actually touched base on, having a management company, this gives us a time to what we wanted to do, and we don't have to manage the day-to-day property. They provide what we need. They do day-to-day support. They provide our, weekly report, financial, all those things. As long as we know that, they know that what we wanted to as a, what is our vision. We wanted to have occupancy this rate. This is what we want to upgrade. Just like Tom mentioned, we have given our velocity of rehab units. This is what we want to do on this date. We want to do. We can go up and down. So at a certain point, yes, we would love to leave job, and maybe our goal is to, if Paul, I still have the paper that we all could work together in the Starbucks.
We met 4 years ago. I mean, it's been a while that we did a Starbucks meeting and kind of penciled out exactly where you guys were and where you wanted to go. And so, I mean, I think we're on target. Maybe we're a little bit behind, but at some period of time, you guys want to do this full time.
Yeah, I think we are target. We set up a goal about 5 years, and the Vickery was a learning process for us. Definitely, we wanted to close by last year, but that's okay. It is all part of the learning process in the real estate business.
What about you, Tom?
I'm looking to follow these guys, and I think one thing that they probably haven't mentioned is they have a great opportunity to build net worth in a business that they can scale, and as they become more comfortable, they can acquire more units, and we're right there with them to do that. And what we want to do, Brenda and I are at the time in our life where we don't really want to do day-to-day work anymore, and so we're looking forward to retirement, but we still want to be involved in investments, and we see that this is a way that we can scale up and produce a stream of income that will enable us to do that. And we have other investments, and there's some that we want to get rid of, and some that and move that money into multifamily. And we're looking to go with these guys and make that happen.
Great. So a lot of people listening to the podcast are, first or second, starting to get started in multifamily. So what advice would you give yourself a couple years ago when you were first starting out that you know now that you wish you knew back then?
Well, we would say that be prepared for challenges, as they always leave you more educated than before. Get as much as possible training that exists out there, online, in-class training. Create a supportive team, right? We have, over the course, not only that we have built relationships with brokers, lender brokers, and attorneys and property management companies. Most importantly, what we have done is built a very supportive team of key principals and passive investors. Some of them have been with us from day one, right? So build that support around you, and then don't be afraid to ask a fellow investor or mentor if you need any support.
Yeah, I just want to add on to that thing, this talking about, having a supportive members. Tom has been very supportive from the day one. When we asked him to become our member, and he didn't hesitate. He knew where we were coming from, what we wanted to do, what is our vision. So we stick together in third property. So hope to have Tom along with us for any future property that we want to acquire. So I think the only thing we can say is that be confident. Set up a goal. His goal is not always very difficult to do, and stick to it. Be a part of the team. Build a strong team. And just like we said, you have an investor, you gotta have a legal team, you have a good accountant, CPA with you, and not only that, you gotta have a relationship with the regional bank and also with a lender like you guys are. It's always with us, and do appreciate your time.
Yeah, talking to Tom.
What I believe in is a strong team, and have to rely on the expertise of all the other people that are involved in. And so I agree with every bit of that. Our philosophies align in a lot of different ways. One thing I'd like to say to people that are just beginning to get into investing in apartments and stuff like that is to have realistic expectations as to what they're going to get out of it, because not every one of these deals is going to be a great deal, but they need to be able to have enough understanding of the business to evaluate a property and make a decision, and have realistic expectations on the backside of that. And if they do that, then I think they'll be quite happy with the results.
Great. So, hi, if any of the investors out there want to get in contact with you guys, what's the best way for them to reach you?
Email us
Okay.
at 7cshld@gmail.com.
One more time.
It's 7 C's, spell out the word SEVENSEASHLD for holdings at gmail.com.
Okay. And Tom?
The same one.
Same one. Okay. Great.
All right. I can't thank you guys enough for hanging out in the podcast and sharing your experiences with us and teaching us a little bit about how partners work and how partnerships together can be very successful. And we rely upon the strengths of both parties to make it work. So again, thanks to the Sharmas and Woodruffs. We appreciate you driving all the way 70 miles into the Dallas area, and you guys driving all the way for your area to the Old Capital Podcast. And thank you very much.
Thank you, Paul.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.